Welcome to this Hard Asset podcast with Bill Youngerman. Our subject today is investing in gold. On this podcast, you're going to learn a great deal about investing in gold, why it has proven such a strong investment throughout history, the reasons investors purchase it today, why now may be an especially good time to invest in gold, and the keys to successful gold investing, what you need to know to make your experience in gold investing safe, secure, as well as the guides to making it profitable. But before we begin, a little about podcast expert Bill Youngerman. Bill is a knowledgeable and trusted gold and precious metals dealer in Boca Raton, Florida, and is PNG certified, the mark of distinction among reputable gold and numismatic dealers. He is also a member of the ICTA, the Industry Council for Tangible Assets, the ANA, American Numismatic Association, and a member of Florida's United Numismatists Association. Bill Youngerman is extremely knowledgeable and experienced in precious metal, coin, and currency investing and collecting, having served the South Florida investment community since 1967. Welcome to this podcast, Bill. Let's talk about investing in gold. Give our listeners an historical perspective. Why is gold considered such an important part of someone's portfolio?
Well, Lou, for over 5,000 years, gold has been the metal of kings. It has represented wealth. It has represented money. And as it became money for our modern countries, in the United States, we originally had gold-backed currencies. In 1933, the United States government took away the gold backing and requested that all U.S. citizens turn in their gold coins or face stiff penalties. They were allowed to only own collectible coins at that time. So that was in 1933. Gold was pegged at about $33 an ounce in those days. Fast forward to 1971, and people are starting to clamor for gold. The world is saying the gold was fixed for international reasons in our country at around $43 an ounce. And so international settlements could take U.S. dollars and turn them into gold. Nixon in 1971 said, no more. We're not giving away any more of our gold at these ridiculously low prices in exchange for our greenbacks. And so they closed that window to foreign countries. Then they allowed gold to start to float in a commodity sense as to what it was worth. And they relaxed the windows as to what people could own. So American citizens once again could start to own certain bullion gold coins. From 1971 to 1980, we saw gold go up from as low as around $70 an ounce all the way to $850 an ounce. That was in 1980. Then inflation was roaring, which is one of the reasons why we want to own gold in those times. Double-digit inflation, concerns about the economy, and gold peaking out at $850. Then we saw a correction as interest rates in the United States rose to 25%. It was ridiculous, crazy. It brought down the economy. It brought down gold back down to about $300 an ounce, and it gave the public another opportunity to own gold at a very reasonable price. In 2001, gold started to look like a very good buy again, at least to us, and people began to start buying gold again to protect their currencies. That being said, we saw a run up from 2001 to 2011 to about $1,950 an ounce. Then we saw a correction in that price, bringing it back down to about $1,100 an ounce, giving us a great opportunity and timing to add to our portfolios of gold investment. And that gold has now working its way back up.
So the purpose of gold in an investment portfolio, in part, is as a hedge against inflation, a hedge against economic volatility in a country. So you were talking about back in the 70s, during the Carter administration, when the interest rates rose, the economy was going through a difficult time, that gold became far more desirable, and the price of gold rose significantly. The same thing back in 2000. I'm assuming in 2008, during that time of economic volatility, gold rose again. Is that correct, Bill?
Yeah, gold suffered a little bit at that time when the stock market took a big drop. People were looking around for some asset that they might have that they could help to make margin calls that they had in the stock market and a host of other things. So that kind of brought gold down a little bit, but then it turned right around, as did the stock market, and went on up to the levels that we see today.
So, but generally speaking, over the course of history, gold has been a good hedge against inflation, and when the market is having a difficult time, gold and precious metals in general usually seem to do better. Is that accurate?
Absolutely.
Let's talk about why buy gold then. If I am an investor and if I have money to invest, why would I want to buy gold now?
Well, it's probably the most logical diversification you can put into a portfolio. I mean, everything else that the investment world is offering today is, for the most part, paper assets backed by fiat currencies that have no backing at all. They're just printed IOUs with no hope of ever being redeemed in the big picture. So to own hard assets or gold or silver or platinum, you're hedging the fact that you could be looking at a currency just like in Venezuela and a host of other countries over the years have dealt with when their currency became worthless. So it's a great hedge. It's a portfolio insurance policy that I believe everybody should own.
What about now? Is now a good time to be investing in gold? And if so, why?
I think timing is fantastic right now to own gold. We're looking at $22 trillion in deficits right now in debt, and almost that much in public debt. This is one of the best protections you can get against them monetizing the debt and simply printing more and more current fiat pieces of paper. The debt is totally out of control, and not just in our country, but worldwide.
And we're seeing that played out by other countries who are investing more in gold themselves. Is that correct, Bill? And who are some of those players?
Yeah, actually, the central banks have become almost net buyers of gold now. Gold is the only real hard asset that central banks own. They own a basket of currencies, but they also own gold. And central banks such as Russia, China, India have all been net buyers of gold.
If I were to want to buy gold and add gold to diversify my portfolio, how should I invest? Should I be looking for things like ETFs, which are relatively new, exchange-traded funds on the stock market? What would I do? What would be the best way to go about buying gold? Or should I just buy gold from a reputable dealer? What should I do, and why should I do it?
Okay, once you start buying an ETF, you no longer actually hold a hard asset. You have a piece of paper from a stockbroker that says you own X number of shares of an ETF. Whether that gold is actually in supply and being held for you is always questionable. So then you've got something, it's become almost a liability because it's not physically in your hands. So ETFs are fine if you want to just be a trader, a day trader or a short-term trader of gold or silver. You can click your little mouse, buy a few shares, sell a few shares. That's not hard asset investing. That's no different than buying a stock. We're talking about an insurance policy. We're talking about buying something that is real. And the only thing real is what's in your hands in the way of precious metals.
Bill, where would I go to buy? You've said before that one of the things that's important for people who are looking to invest is to educate themselves. Where should they go, number one, to buy gold, and where should they go to educate themselves?
Okay. One, they should educate themselves. In this day and age, it's so easy to educate yourself by just getting on the Internet. If you type in on the Internet 10 reasons to own gold, you'll get 50 different statements concerning that. There's plenty of education available, including our newsletters, our website, our podcast, as well as the fact that you need to know your dealer. And the way to know a dealer is to find out, what dealer should I buy from? The only dealers, as far as we're concerned, anybody should buy from are members of the Professional Numismatist Guild. These are 300 of the top dealers in the world, and they have to stand behind what they buy or what they sell. They have to guarantee its authenticity. They have to submit to an arbitration board if there's any questions about any transactions. And beyond that, as P&G dealers, you can also deal with an accredited precious metal dealer under the P&G banner. These are P&G dealers who have been accredited by the P&G as substantial precious metals dealers. And you can access the membership of the P&G through going online and just typing in P&G membership. And you can find either a dealer near you or you can check us out too.
Well, William Youngerman has been an accredited P&G dealer since really the very beginning. And you are one of those 300 members, and the William Youngerman Company is also, Bill, you are one of those accredited dealers. So I think if you're looking to invest in precious metals, as Bill said, you want to consult with someone who is proven, who is been accredited, somebody who's not going to create problems or disappear in the future. You want to avoid any potential issues or scams. Those have been prevalent in the past 15, 20 years here in this country. And the way to do that is to deal with someone reputable. home, which of course would be William Youngerman here in Boca Raton. Bill, are there any final points that you want to bring to our listeners about investing in gold that they might want to know, that might be helpful to them?
The main thing is to educate yourself and always, always take delivery of your precious metals. Do not let somebody else hold your precious metals.
If I buy the gold, is it hard to store it? Is it easy to store it? Tell me about storage.
Gold is the easiest thing to store. You can hold $100,000 worth of gold in one hand. Silver is a little bit more complicated because each 100-ounce bar weighs about 7 pounds. And when you start buying substantial amounts of silver, you need a place to store it safely. As far as gold is concerned, you can bury it. It sits on the ocean floor from the shipwrecks. They bring it up from the 1715 fleet 500 years ago, and it looks like the day it was made. So gold is easy to store, even in a fire. It can change form, but it's still worth its value.
Bill, what about investing in gold coins or some other type of gold? Is that the same? Would you recommend that if you're looking to invest in gold?
Yeah, the nicest and most practical form of investing in gold is through the coinage that has been minted by several of the government mints, such as the United States Mint, which produces the U.S. gold eagles, as well as the silver eagles and platinum eagles. These are very, very popular. Hundreds of thousands of them are sold all the time. And that's a great form. Also, the Royal Canadian Mint produces their gold bullion, silver bullion, and platinum bullion coins. And also Australia's Perth Mint also produces gold, silver, and platinum coinage. These are nice because you can get them in sizes of 1/10 ounce to 1 ounce. They're very tradable, recognizable worldwide, and you know that you're buying something that's made by a government and that is easy to identify and very difficult to counterfeit.
Bill, you mentioned something about premiums on gold being low. What does that mean to me as someone who's considering diversifying my portfolio?
Yes, there's great buying opportunities right now in our industry. The premium is the price that you pay over and above the intrinsic or the spot gold price, silver price, or platinum price. Right now, gold is trading, as far as the premiums are concerned, at the lowest premiums in history. Whether you're buying the old semi-numismatic gold coins that the United States minted prior to 1933, or you're buying the U.S. Gold Eagles or Royal Canadian Mint, Maple Leafs, all of these are selling at the lowest premiums ever. In fact, we're selling these products right now at less than our cost from the mint. That gives the buyer a fantastic opportunity not only to own gold at a bargain level, but also to pay the least premium we've ever seen in history. So this is a great buying opportunity.
You've been listening to the Hard Asset Podcast with Bill Youngerman. Successful investing in hard assets, precious metals, coins, and currency requires knowledge, and one of the best and simplest ways to educate yourself is by subscribing to William Youngerman's Hard Asset e-newsletter. This newsletter contains great current information about hard asset investing, reveals recent trends in precious metals with a brief commentary, includes background and pictures of interesting hard asset collectibles that will help you gain knowledge of this fascinating field, and even contains new current additions to Bill Youngerman's own collections in Boca Raton. To subscribe, simply visit the website at williamyoungerman.com and click the Subscribe to the Hard Asset e-newsletter button at the top of the page. It's that simple. Thank you for listening to today's podcast, part of Bill Youngerman's goal to help make you a successful hard asset investor.